Hi everyone, and welcome back to my channel. In this video, I would just like to walk you through the PPI data that came out this morning and what it means for the market going forward. And honestly, it has already been reflected in the market in today's trend. So let's take a look at that together. So first of all, the wholesale prices unexpectedly declined 0.1% in August, and this is way below expectation. Normally, when inflation is low, it's a good thing. It's something that you should celebrate. But in this case, it's too low that we should worry about the economic decline. And this ties into the earlier jobs report that we had, where there are corrections that we did not expect coming. Well, we kind of expected it to come on this channel because we had evidence that institutions are buying the inverse indices in amounts that have not been seen in the last 20 years. So we knew that was coming for months, but we just didn't know the concrete economic evidence to back it up. But now we do. We are heading into a deflationary era. And this is different from the earlier stagflation scenario. And the difference between deflationary and a stagflationary economy is that the stagflationary economy still has an economy that's growing, it's just stagnant. But in this case, we don't have an economy that's growing, it's just deflating itself. That is the key difference. And in terms of the Fed rates, in a stagflationary economy, it's much harder to cut rates so that the economy can have some kind of breathing room to boost consumer demand. But in a deflationary economy, you can cut rates, but the economy is deflating. There is nothing the Fed can do about it. And so this is why we're having a short-term rally, if you will. And after the rate is cut, it's just like a balloon that's deflating itself. So the market, you can see a quick and decisive decline after the rate cut. We will see about that. I'm just putting it out there right now. For tomorrow's CPI data, there could still be a upward tick, and you could see this blue line on the QQQ. You can use this as a resistance line for tomorrow morning's uptick in the market because there was an institutional buy here on the 10-minute chart for the QQ just at market close. So you could still see an uptick in the market tomorrow morning, but this is your resistance line. And after this, you can see a downward trend just like today, an uptick and then a downward decline. And when we're looking at the overall market between the three indices, you can see that the Nasdaq and the S&P are in the green, but the Dow is in the red. So normally in a celebratory bull market, you would see all three indices in the green, but the Dow is in the red. So this is your indicator of the PPI data that we looked at earlier, that this is not a performance of a market in a rally phase. This is a market preparing for recession. And looking into the next 2 days, you can look back into this QQQ open interest chart that I showed earlier in my shorts. So we're looking into the next few days. You can see there is this stockpile of puts and calls on the 12th of September, which is Friday. So there's likely going to be a bigger move on Friday than tomorrow because there is a bigger stockpile of price actions from institutional and retail investors. If we look at one of my earlier videos, we can see that the open interest on September 5th was ticking up here. And on September 5th, you can see that there was this huge uptick and then there was this huge sell off that followed the uptick. So for September 12th, you can expect the same move as this. And after the rate cut, I think the market will see a bigger sell off, but we will update on this channel as we go.